Welcome back to Mike on Money, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And here's where we talk about everything financial. And today we are talking about part 2 of our cryptocurrency series. And specifically, we're going to be covering off Bitcoin. So if you watched part 1, or if you haven't watched part 1, go back and watch part 1. It's all about the blockchain. Today, we're going to be talking about Bitcoin. And then Ethereum and other types of cryptocurrencies, and then where to invest in the different characteristics of those different platforms. But before we start, as always, everything we talk about on these videos is for educational purposes only. Do your own due diligence or reach out to us at mikeonmoney.com to get advice about your specific situation, your different risk profiles, what's right, what might fit into your investment strategy. And when not to use some of these things. So always be very diligent, especially with cryptocurrencies. They're very, very volatile, and you need to use caution and make sure they're right for your situation. So with that, let's dive into Bitcoin. So as we talked about last time, Bitcoin is the first cryptocurrency that came into an existence on the blockchain back in 2008. And it was designed to be a currency. It was designed to replace a currency like a fiat currency, like the US dollar, the Canadian dollar, and it was meant to do transactions. But what they quickly found out with Bitcoin, if you followed the blockchain video, if you think about all those computers and you think about all those nodes that have to be part of this ledger, Bitcoin quickly became too expensive to do small transactions, day-to-day transactions. So it does have the characteristics even better than some other currencies that we look for, mainly scarcity. Because as we mentioned on the last video, there's currently about 18 million in existence. Total number capped that will ever be in existence is 21 million. So, it has scarcity, it has limitations. It obviously has value. And if you think of Bitcoin, it's very much like a gold currency. As opposed to the fiat currencies. The fiat currencies, yes, scarcity is not as much of a factor with them because especially recently, we're seeing governments print a lot of it. And obviously that affects the value up and down. Whereas gold is a better comparison to Bitcoin itself because Bitcoin and gold, are both kind of a value retention type of currency. Gold isn't good as a day-to-day currency. It's hard to store. Transactions, are expensive to keep track of. Divisibility is not easy, especially with the value fluctuating based on the commodity. But gold is very similar in the sense that, gold's been around obviously for a very, very long time. And at one point, it was a currency, but it lost that feature over time. Because of the challenges it has being a day-to-day currency. But it does have a retained value. Now, this is different than other metals. If you think about silver, silver has a day-to-day industrial use, very much so. And a lot of what we mine in silver out there is actually used in day-to-day or industrial applications. It's not kind of just in retained value. Gold, however, we mine way more than what we use in industrial or daily consumption. A lot of gold is used for retained value. And if you think about even the last decade, gold's been between 1,000 and 2,000, and it stayed there even though we have more than enough gold to sustain our industrial uses. But it's an investment currency. Banks use it, countries use it. Individual investors use it as a way to retain or hedge against, other currencies and other risk factors. And that's really the characteristic that Bitcoin is starting to develop, is this a retained value type of currency. It's really not for day-to-day transaction. I've talked in other videos, in previous videos, about the challenges of cryptocurrencies as a day-to-day currency. Obviously the cost factor, which is the big impediment against Bitcoin, but also there's the regulatory issues, which we're seeing a ton of right now. China's clamping down on cryptos. Even the U.S. government has come out recently saying that, you know, they're really seriously exploring coming out with a U.S. dollar version of the crypto, so they can regulate it, right? I mean, there's money laundering, there's taxation, you know, capital gain tracking. There's just so many different areas that the governments, if they lost control of those regulatory rules from a cryptocurrency, it would seriously affect their ability to, you know, police things like money laundering and crime, but also to manage their tax flow. So that's a whole other issue. I'm not going to dive too much into today's video, but specifically talk about Bitcoin. So Bitcoin, as I mentioned, you know, is this value retention. So people are investing into it, saying, "Hey, there's a limited supply. More people are going to buy. It will increase in value over time, or hold value while other things maybe devalue." Specifically, people look at the U.S. dollar. And that's why we see that volatility. And we have seen a lot of volatility in Bitcoin. In fact, just this year, in a one-day move, I think it went down 42%. It also went up 44%. So a lot of volatility both sides as people move in and out. Now, part of that is how it's held or how it's bought. So it's held on the blockchain. Well, there's kind of three main buyers. There's institutional buyers or corporate buyers, and these are companies that will invest into Bitcoin as part of the retained earnings. So you heard Tesla, of course, Elon Musk tweet now about cryptocurrencies a lot these days, also driving some of that volatility. But Tesla, you know, announced that they put $1.5 billion of their retained earnings of the company into Bitcoin as a retained value around, you know, for the currencies against, you know, possible fluctuations of the U.S. dollar. So there are other corporations out there doing it as well. So that's one type of buyer. There's institutional buyers. So there's a institutional investor called Grayscale that has been in probably one of the earliest, and I think they're up to about 40 billion last time I saw their total value that they have in Bitcoin as part of their ledger, that they just hold that as a retained value investment, and that's going to be there for the long run. And that's how they're going to manage or keep track of value against other global currencies around the world. And then, you know, lastly, and it's newer, is the retail or investor out on the street. And they can invest in through a few different ways. Traditionally, until recently, closed-end funds, and Grayscale actually offers the closed-end funds, so kind of like a stock investment that they can invest into. And then more recently, ETFs, so exchange-traded funds. And if you want to know more about exchange-traded funds, we're actually doing a video coming up here on Tuesday, June 1st. We're going to dive into ETFs and their characteristics, but there's more access has been given where these funds are out investing into currencies or cryptocurrencies like Bitcoin that you can invest into as well and buy it there. Or, you know, you can go out and buy them on different platforms, Coinbase being a very popular one, and more recently PayPal now allows you to buy cryptocurrencies within your accounts there and hold it. So those are kind of the three different areas people are buying them. And as this new access that has recently opened up with the ETFs and of course the different exchanges that you can buy on as an individual, that has kind of driven a lot of the volume, and that's where we've seen a lot of that increase in value over 2020 in Bitcoin's valuation, and also into that kind of retained value over time. You know, it's held up even when we've seen it fall from its 60, 70,000 US down to 30. You know, 30 is still a lot higher than it was even a year ago, and a couple of years ago, you know, down as far as 5,000. So that's kind of the characteristics of Bitcoin. Very, very volatile movements within the hour, but it's more for retained earnings. There's not a lot of transactions that's going to happen with Bitcoin for all the different purposes we've seen. And I don't see that changing in the near future. So I'm going to end part 2 there. Next part, we're going to talk about Ethereum and other types of cryptocurrencies, and how they'll react in different markets, and why they react in different ways. So we'll talk again shortly.